Want to sell your home but still have a mortgage to pay off? Or maybe you've been in your home less than 2 years, less than a year, less than 90 days, and you're trying to figure out, can I still sell since I've been in such a short amount of time? Or maybe you have a certain loan type and you're trying to figure out, can I sell now? Well, we're answering all those questions and more, and we're doing it right now. Let's do it. A while back, I put out a video that asked, can you still sell your home before paying off your mortgage? And from that video, a litany of questions came in. So in this video, I want to answer those questions that you have. Starting with, can you sell your current home if you haven't paid off your mortgage? The quick answer to that is yes, you absolutely can sell your house. You still have a mortgage. Matter of fact, most people do that. There are very few people that actually pay off their entire mortgage and own their home outright before they sell it. If you want to know more details about the answer to that question, take a look at that first video I posted. I'm going to put it right here for a link for you after you watch this video. After that video was made, one of the main questions that came up was, how soon can I sell my home after I purchased it? The answer to that question is you can actually sell it any time after purchasing that home. You can sell a day after you purchased it, a year after you purchased it, 2 years and 3 years and the like. But there are some things that you will need to know if you are selling quickly after purchasing a home. One of the first things you want to know is if you've only been in your home for less than 2 years and you sell it, if you make a profit on that home, your profit is subject to capital gains tax. When you sell a home that you've been in for less than a year, the IRS is going to treat you like an investor, and investors have to pay something called capital gains taxes. Now you're going to want to talk with your CPA about how much you need to pay. I am not a CPA, I'm just here to tell you that the capital gains tax does exist, so talk to the expert in that case. One thing that I did find out was I actually had a client that was in a similar situation. They purchased a home, and a little over a year later, they had to sell that home because the husband got a job and was moving across town and wanted to be closer to that new job, so they needed to sell. Well, what I found out in that situation is the capital gains tax can vary in terms of percentages depending on how long you've been in that home, even if it is less than 2 years. Since they had been in over a year, they actually had a lower percentage that they had to pay on capital gains tax. What that means is if you've been in for less than a year, you're pretty much going to have to pay that whole percentage. Now, there is a caveat to that, and that's this. It's based on the profit that you make off this house. What you can do, and again, talk to your CPAs, you can write off any expenses you occurred while owning the home and while going through the purchase of the home. What I'm saying is there could be some write-offs that you have to pay less on the capital gains if you do make a profit. But it's possible you don't make a profit. If you don't make any profit, then there's no capital gains to pay, and you don't have to worry about this. So with all that said, whether it's been a day, a year, 2 years, 10 years, you can sell your home whenever you need to sell your home. The next question you need to answer is, Jonathan, how can we make sure we see all of your videos when they come out? And that's easy, hit the like button and subscribe to this channel. Okay, so maybe that wasn't a question that came in, but still hit that like button and subscribe. The next real question that came in was this. Does the type of loan that you got when you purchased your home affect you when you're selling your home if you're selling quickly? All right, so let's go back to the type of loan and talking about the time period of which you're selling. The quick answer is no. It doesn't matter which type of loan you have, you can still sell as quickly as you need to sell. However, the type of loan you got actually does affect the person that's coming in to buy your home and what type of loan they can acquire. For instance, if you sell a home within 90 days of purchasing the home and a buyer comes in with an FHA loan, FHA buyers actually have to wait 90 days after the previous sale of that home to purchase a home. So if you're trying to do a quick sell and you're using an FHA loan to buy the home, you actually can't buy a home that's being sold quickly. The other thing you need to be aware of is appraisals can stick with the home for FHA and VA loans for a certain amount of time. So if you're trying to sell your home quickly, let's say you purchased a home and a week later you found out you're being transferred to another job or some other emergency comes up maybe, well, the appraisal that you had for the house when you purchased it can actually stick with the property depending on the type of loan that the buyer is coming in with. So if you're trying to sell that home quickly and you're trying to, hey, maybe I can sell it for $10,000 or $20,000 more than I just bought it for, well, it depends on the type of loan that the buyer's coming in with to see if that actually can be done, because they're only going to lend for the amount that the appraisal is for. Now, it's possible that buyer comes in with some extra cash and can pay the difference, so there are ways around this, You could sell it to a cash buyer too, and they can get around it. But just be aware that if you're trying to sell quickly, there are some caveats for the buyer coming in and some rules they would have to follow to be able to purchase your home. Another question that came in when it comes to can you purchase a home before you pay off your mortgage is this: okay, if I'm purchasing the home, when does my last payment go in for that mortgage? Here's how it kind of works. When you go and you sell your home, in Georgia, we have closing attorneys that sell the home. So I'm just going to talk about closing attorneys, and that's the closing attorney at closing will actually pay off your mortgage from the proceeds of the sale of your home. Now, as long as your proceeds meet or exceed the amount that you still owe on your mortgage, as long as that happens, then the attorney pays off your mortgage, and whatever that difference is, you get that amount in a check as your profit for selling your home. That payoff is sent off to whoever has your mortgage. That is paid off, and you've now paid off your mortgage. So your last payment could be at the closing table. There's something important to know with this, and that's depending on the day of the closing will depend on if you've actually already paid the mortgage payment for that month. And what sometimes can happen is you as a seller can pay your mortgage for that month. You go to closing, the attorney has gotten information from your lender who holds your mortgage, and that payoff that you just sent actually hadn't hit their records yet. So the attorney is only going to be able to see what is sent to them by the lender, and they'll pay off whatever that loan amount is. So it could be you have an extra payment that was sent to your lender and they pay off your mortgage. Where does that extra payment go? Does the lender just keep that difference? Well, no, not at all. What happens is you want to make sure you give your forwarding information to your lender. So if when they pay off your mortgage, the attorney pays off that mortgage, if there is a difference and you've paid too much, they'll just cut you a check, send it back to you, you'll get your money back. So you don't have to worry about if you overpaid on your mortgage, you'll get that money back. One of the last questions that's asked to me is, okay, what happens to that money in our escrow account that pays on our property taxes and on our homeowner's insurance? Most people will have an escrow account if you have a mortgage. Now, some people opt out of it, but like I said, for the most part, people have an escrow account. And that's simple. It's kind of the same as if you overpay on your mortgage when you're closing on a house. They'll cut you a check back. So when you have an escrow account, if it still has money in it, that money is just sent to you once the account is closed. All right, I've now answered the questions that I got most from that previous video on paying off your mortgage when trying to sell your home. And if you have more questions, please put them in the comments section, or you can send me an email, shoot me a text. I'd be happy to answer your questions to the best of my ability. If you like this video, you'll probably also like this video right here. And I post videos weekly about all things real estate, as well as living, working, playing, and breathing all things Atlanta and the metro Atlanta area. Thanks, and I'll see you next time.